Hey, there's that time of the month. We're here at 5Market Realty. If you follow us, you know that we like to do two market updates each month. One that we focus primarily on the Athens area market and the counties around Athens, Georgia. And then there's this update where we do a little bit more deep dive into the national real estate trends and what we're seeing there with one of our resources we use at Keeping Current Matters. And if you're interested in Athens area real estate, if you just want to be kept up to date on what's going on in the market, or if you're in the market to buy or sell, be sure to click subscribe and you'll be notified when we have more update videos and possibly other properties that are on the market. But what we want to talk about today is what we're actually seeing in the real estate market versus the narrative. The biggest thing we're seeing here in February today is February 10th. For me, you might be seeing this on Sunday or Monday. And we are seeing a lot of buyers return to the market despite the current interest rates. We want to talk about what those rates really are. And then we have another negative part of what's going on in the market, and that is that while buyer demand has returned, the inventory hasn't. And that's creating some unforeseen things that I think people were predicting 6-7 months ago. So let's get started. Let's talk and dive into it here. You know, I think in every update video that we've done over the last 7 months, we've had to talk about mortgage rates because they've gone up so much, starting from going back in April, and how fast they went up relative to where they were. But there's good news in the market because right now we actually have a downward trend in the mortgage rates right now. So you can see this is November 10th, where the rates were above 7 for a lot of people. And now as we head down here into February, this is about a week behind, but in the low 6s. We're actually seeing people get quoted rates around 5.5, maybe 5.35 for primary. So we're seeing some different trends. That's a positive thing, and that's a part of what's going on here. So we're going to go to our next slide. And this is from Ellie Wolf, who is a chief economist at Zonda. And her quote here is, "I wonder if some consumers have worked through the 5 stages of grief of higher mortgage rates." And it sort of feels like the worst is behind us. I talked about in the last video. And what I mean is that impact that we had and the real height of the interest rates is starting to feel like a much more normal climate of interest rates. You know, we might not be as low as 4, but we're not looking as bad as we were in the October and or late last year. So this is basically a little stat showing you the interest rates starting up here at 7.5%, 7, 6.5 down to 5.5. Red at the top being a weak buyer demand. And then, of course, as we get down to the bottom, strong buyer demand. Well, let's take a look at what this has actually been over this year. We're starting here in January. That's January 3rd. This is not going back to last year. This black line represents, because of where the rates are, a pretty good buyer demand. And actually right here in the beginning of the month, as I'm referencing, we actually saw it dip down into what we classified as strong buyer demand. So that's what's going on. As people are returning to the market, is it going to be what it was before, where it was such a frenzy when rates were below 3%? We're not expecting that, but we are already starting to see here in Athens, especially at certain price points, we're seeing multiple offers. We're seeing a lot of people go for certain properties and certain price points. Keep in mind, this isn't every price point. What we're going to have to figure out here is, if you're sub 400 and your property's priced correctly, you're going to attract a lot of attention. If you're over 500 and you're priced correctly, you're probably going to attract some attention. But if you're priced too high for your property, it's probably going to sit. We're actually, we're seeing some properties sit. And if you're one of those sellers right now, I want you to really evaluate, is your property a little bit too high? Now, the narrative here, new listings, what's been going on is if we went back to June of last year, when the interest rates were starting to go up, the narrative became very quickly, well, here's the crash, But what we've seen is we thought what was going to happen was this with listings, right? So this is June. The red here is 2022. These other colors are the years 2021, 2020. This is new listing counts in the thousands. This is a national perspective from Realtor.com. This is what we thought would happen. Frankly, what some of us were hopeful to happen with new listings. We thought they'd be going up. This is the reality of what's happened. And that reality is we have done the opposite of what was projected. And that is the narrative of what's going on. People are starting to listen to the news in the wrong way and not actually the facts. We're having people that are very content to stay in their home because of their interest rate, or they're scared that they can't replace what they have. And what's that doing? Is keeping supply low while demand increases. And it's simple economics when supply and demand. So despite what the narrative was, we're actually seeing a very different trend. We saw a little bit of a rollback from what I described before as what we thought prices weren't going to where they were in certain price points. But now we're starting to see as demand returns, we're going to need more listings. So this is a look at new listings now below previous years. This is going back to 2017. Right now in January, we only have the numbers in for January 2023. We're below January of last year, which was historically low, and far below 2017, 2018. Look at 2019, 436 new listings in January, and we're only at 318 right now. So this is also the narrative of our Athens market update. I showed this this slide, and this is looking at 2019, the amount of new listings in Clark and Oconee County versus the amount of listings right now. And you can see the gray is, basically this is broken out. And just look at this. Let's just add this. You've already seen this slide from one of our last ones, but the gray is the home sold. The red is the new listings. And the new listings at 225 for Clark and Oconee County, 2019, that's pre-pandemic. Right now, we're just over, I think it ended up being about 82 listings for the month of January, Clark and Oconee combined. That's barely a real estate market, folks. I mean, that's not enough transactions for what people need to meet our demand. And it doesn't mean the prices are going to be coming down. How are prices going to come down if we don't have a supply? We do have a lot less transactions. Economically, there's less transactions going on, but we're not seeing this significant rollback in prices that was discussed. In fact, I have a nephew that some of you watch this video might know. I happen to remember in 2020 having a conversation with him that he thought that the market was about to crash. And I sort of said, well, I kind of disagree. I mean, with the supply that we have, I don't know how. 2021, a year later, the same conversation. Well, I think that's what's going to happen. The prices can continue. I appreciate where he's coming from, but working in what I do, I said, well, something's going to happen with supply for that to happen. Then when interest rates came in 2022, there was fear again of, well, what is this going to do? Well, the fear of what it should be is if we don't do something with supply in these interest rates, affordability is our biggest problem. It's not a market where things are drastically coming down. The housing market is a lot more resilient right now on prices than people had predicted. Here's a quote from the man at Altos Research, which is a resource that we use, or I like to. I don't often work with their graphs. I find them a little confusing, but their information is fantastic. His quote, I'm looking at the latest housing data and I see surprising demand indicators, including home price resiliency, supply staying restricted. Who would have guessed that? That's just what I said. Everybody keeps trying to say the market is going to crash, and there's not a metric out there that's telling us that right now, because if we have increased demand, buyers trying to get a home at certain price points, it's still extremely competitive. Might be a different narrative if we get over certain levels of price, but we're just going to see how that pans out. Big banks are beginning to revise their forecasts. This is something to watch. You saw in some slides towards the end of the year, there were forecasts for calling for home price depreciation. This is from, I'm not sure if this was Goldman Sachs, I think, that this was from, calling for 6.1% reduction. Well, now they're calling that a little bit less, closer to 3%. So watch how these projections are going to change based on what we're seeing right now. And then we talked about this in our last national market update, have home values hit the bottom. Remember when we had this big interest rate push July of the summer, and then it got really painful for a lot of people that might have been on the market. I know I had clients that suffered through some of this, and with the interest rates going up, you can see this is the home value different indicators from FHFA, Black Knight, CoreLogic, a little bit of a come down. We showed you this, but this little box, we're going to know more once we could go back, look back at December, January, and February. But at the moment, it's feeling like that might have been it. We might see some green numbers coming back as we head into 2023. Now, we've done this before, and I want to do it again. Headlines do more to terrify than clarify. And this is probably where I'm seeing the most damage being done to people that are trying to time something or think they have insights that maybe they're misunderstanding. I'm guilty of this myself. I don't take a lot of deep dives into a lot of articles online. I read the headline, then I move on. So maybe I'm not getting all the information. I like to do a lot more reading on Georgia recruiting and things like sports articles than money articles. And then I really do the deep dive on information more local to me. So I'm guilty of it. But let me show you some examples they gave us here of what's going on. This is probably the scariest slide I've put out in a while, and I'm seeing it firsthand myself. 67% of Americans say a housing market crash is imminent in the next 3 years. I've been doing this for 20 years. I'm a real estate broker. I'm not trying to be a salesman here. I do not know how a market's going to crash without a supply. What affects the economy is supply and demand. We are not getting the listings to create a housing crash. I had someone mention to me that they were trying to buy a unit here in Athens, and they looked back at the last comp that would have been around 185 in September. They said to me, well, I don't really want to pay what the person paid in September because they might have overpaid. And I had to educate him quickly, like, whoa, that's not what's going on here. The price of this property is so hard to get. There will be demand for it. Well, I'm not going to name the property, but it's going to close $15,000 over where the last one was in September. So it's already higher than September, despite what the narrative is. And that's what people need to understand. 67% of people feel that way, and that's a little shocking. So here's some examples of some of these headlines. Market updates. U.S. foreclosure filings surged 115% in 2022. U.S. foreclosure activity doubles annually, but still below pre-pandemic levels. A little bit of a truth in there. Foreclosure filings rose 115% in the past year. So some of this is technically true, but you have no perspective. We've done it before. I really hate talking about foreclosures because they're just not playing much of a factor in our market. But let's go ahead and let's look at this. You might be familiar with Attn Research. They do property data information. They do demographics. So they're a real good resource. Here's a quote from their report. Attn, a leading curator of real estate data nationwide for land and property data, today released its year-end 2022 U.S. foreclosure market report, which shows foreclosure filings, default notices, scheduled auctions, and bank repossessions were reported on 324,000 U.S. properties in 2022, up 115% from 2021, but down, that's the big one, down 34% from 2019. 2019 in a normal market pre-COVID. They're actually down. Before the pandemic shook up the market, foreclosure filings in 2022 were also down 89% from a peak of nearly 2.9 million in 2010. So I worked through this time. I know what this was like in 2007 and 8. And look at what it is now. So this foreclosure narrative, that's not truthful either. We are going to see foreclosures are going to go up. They have to because they were almost nothing. There was a moratorium. But right now, if we got 324,000 closes in 2022, that is down from 2019, down from 2018, 2017, all the way down. So that's not going to be a narrative here that's going to create the supply. Maybe something changes that we don't foresee coming that creates a supply of homes. Frankly, it would be a welcome thing to help affordability. But right now, that's not it. So this is what we're trying to make you understand, what we're really seeing versus what somebody's trying to tell you. Let me try to get my head a little out of the way here. So this is 1 million fewer foreclosures over the last 3 years. Look at how much shorter, starting from 2019, we were short. 2018, 383,000. We were short 446,000 in the foreclosures, and now we're short 273,000 in 2022. So that's a total of 1 million of how many more foreclosures there are. So please remove that narrative when you start to see some more of them, because we should see some. In 2017, unfortunately, we saw almost 700,000 of them because it's something bad that happens, but we have to have that return to normalcy. It doesn't mean it's going to outpace other things. Now, another long quote here from Rick Sharga, Executive VP over at Attn. 18 months after the end of the government's foreclosure moratorium and with less than 5% of the 8.4 million borrowers who entered the CARES Act forbearance program remaining, foreclosure activity remains significantly lower than it was prior to COVID-19 pandemic. It's been clear that the government and mortgage industry efforts during the pandemic, coupled with a strong economy, have helped prevent millions of unnecessary foreclosures. And that is what we're seeing. The bottom line is there will be an increase in foreclosures over the next year from record low levels, but there will not be a huge wave of distressed sales. It's happened following the housing bubble. The distressed sales during the housing bubble led to a cascading price declines that will not happen this time. I have to agree with this. Something's going to happen. That's Bill McBride, founder at Calculated Risk. He said that last month. Something's going to have to change with the supply for there to be a difference in the home prices. So if you're someone that's in the market one way or the other, one thing we do need is listings. If you're someone that owns a property that you do want to sell, we have some people that aren't wanting to put a sign up for various reasons. It benefits you to put a sign up. You will get more attention. It's not about the commission. You'll make more money instead of going behind the lines and having to talk to people in secret that you might sell your property. The other thing is, if you're a home buyer, we're here to help you because this market is tricky to navigate. The people in this picture here at our company, 5Market, they can help you. We have people that are entering the market as first-time home buyers. Myself, I'm going both days this weekend, and I know a lot of these people are seeing ways to help buyers get through this that are either first-time home buyers or trying to figure out, what do I do if I got to sell a property? How am I going to navigate that as a buyer? Info at 5M Realty. Be sure to hit subscribe. Thanks for sticking with us for 15 minutes. I hope you found this information helpful. And what I want you to understand is the market is different in different places. So there might be a market where things are declining, but in Athens, Georgia, and around here, we have people coming here. We have a low supply, a high demand, and our market is not in a tailspin. transactions and the amount of transactions, the volume of transactions. That's what's going down. And it will go up as we come up through the year. We're already seeing more listings in February than we did in January, but respective to other years, it's going to be historically low. And that will keep the prices from falling off. Please understand that if you're in the market. Have a great week. If you're watching on Sunday, I guess go Eagles. I'm a Bulldog. I've got a lot of Bulldogs on that team.